Susmit Patodia of Motilal Oswal Portfolio Management is here with me today to discuss that. Susmit, very good afternoon. Thank you very much. It must be a tricky time to be a portfolio manager. How is it fielding queries from investors whose portfolios have been eroded? And what kind of analysis have you been busy doing at home right now, working out of home?
Hi, good afternoon. Thank you for having me on the channel. Yeah, I mean, I don't think we've ever been busier sitting at home than in the last few days that we've been, in this whole lockdown. In terms of firstly, just coming to the clients, I think clients have shown immense maturity this time around across segments. Most of them have understood that even if you can't invest more, this is really not the time to redeem. And that is why you're seeing inflow numbers, even in the month of March in India, into mutual funds. So I think, investors are maturing in India. Coming to what we are doing, at the fund house, a couple of things. One, I think, is for sure we are not trying to find out where the bottom is, right? I think, if you can save energy not doing that, that will give you a lot more energy to do something else. So what we're really doing is trying to find out which business models, if any, is going to get dented and which business models will recover the fastest, right? So these are the two things that we are trying to do from our company's perspective that we own and some of the future companies that we may look to invest in.
So Smith, I was just looking at your portfolio without taking names. 37% of your portfolio is actually in financials. And over and above that, 20% in insurance. There is a newfound love of the market for insurance. So I can understand that that's in great shape. But how is 40% of your portfolio, 37, which is financial, I'm assuming must be all kinds of lenders, which it appears may be getting into a phase of lackluster credit growth, pressure on asset quality, and overall a tough environment because not many of them were very attractive or cheap in any ways. They were fair to slightly on the higher side on valuations. Do you think, what are your thoughts on how are you looking at that?
So this is the, financials is like the best, I would say, beta shots whenever the market goes down. So you can take any correction in Indian markets. The sector that goes down the most are the financials. The most interesting thing about financials is the survivors are pretty much the same names again and again, right? Whether it be in the old HDFC Vanguard, the Kotak banks, or the ICICI banks or the Axis banks of the world. You pretty much have the same set of survivors. Now, interestingly, what happens is, coming out of every crisis, you have one or two, I would say, new shining stars, which if you continue to hold in your portfolio going into the next crisis, is where you can get severely and brutally affected. So, majority of our holdings are in those banks which have survived the last three crises that banking has seen. So that is the, I would say, the past of it. Now, in the current, all these stocks fall, right? As they say, in a crisis, all correlation goes to one. So it doesn't matter if you're the best bank in India or you are not you're not such a good bank, you will fall pretty much the same at the same rate. So we have to train our eyes to look what happens when the recovery starts or when things normalize, forget recovery. And, one thing that you cannot wish away is that the credit intensity of the economy will go up in the next 10 years as we grow from $2.5 to $5 trillion GDP, right? So you will need lending to happen. You will need banks to give out, to take deposits and to give out.
So Smith, let me interrupt you over there.
Yeah.
So Smith, I'm not questioning that at all. I completely agree the point that there is no existential crisis with the name which you have. Neither is the credit growth in our country vanishing anytime soon. it may come into a pause mode. But what I'm wanting to understand from you, what kind of earnings cuts have the name which you own, this 37% of your portfolio, seen? And what are your sense on the crunch in valuations which may happen because of what's hit the environment? And I'm sure you're prepared for it.
Yeah. So, it's nearly impossible to talk about earnings cut right now. This is like a flood, right? So when the flood hits, you just get into your houses and stay locked in. You only see the damage once the water recedes. So I think, talking about earnings cut right now or any earnings number is really shooting in the dark. So, what we are just looking at is two things is do they continue to have access to cheap liabilities and do they continue to have access to capital if required and go back to valuing them at price to book rather than price to earnings right now. And at price to books, these are all already down to below one standard deviation multiples.
लगा रहे. Right. Susmit, what's your take on insurance?
So insurance is a very interesting sector. We've been very, very bullish on the sector for the last year and a half or so. It's very simple. In India, insurance has always been sold as a tax-saving instrument, never for protection. So if you look at the number of policies in India, there may be 35 crore policies, while the sum assured required is only a 10% penetration. So this is what excites us. And, COVID is like an accelerator. You have accelerators and decelerators in trends. And we think COVID could be an accelerator in the trend when it comes to insurance. People will be much more aware about health, general and life insurance as a whole. I think, it is just unfortunate that BFSI includes insurance. But, if you do a little bit of analysis, you'll realize that insurance is pretty much the opposite of banking when it comes to constructing the P&L or doing business.
Sure. And financials and healthcare is 15%, which is clearly coming out of a 6-year dry spell, but still far away from its peak. It used to be what, 14-15% of total market cap as a percentage, and still 4%. What's the outlook on healthcare? I'm sure you have a mix of pharma as well as hospital names.
No, actually, we don't own any hospitals. We own 3 simple pharmaceutical companies, and our perspective has been that 2010 to 14 was a golden run of pharmaceutical, where as long as you had a factory, you could sell anything into the US markets. And 14 to 19 is where things started going wrong. And towards the end of 18 and somewhere in beginning 19, it was clear that the remediation costs were coming off, though you were not getting approvals at the same pace, but the costs were coming off. And that really gave us the confidence of getting into pharmaceutical. And the second aspect is just the domestic, right? The domestic pharmaceutical is such a large, white space still. We just sell 1.4 to 1.5 lakh crore of medicines in India. Just to give you a perspective, we sell 1.5 lakh crore worth alcohol in India, right? So you can just imagine the runway for domestic pharmaceutical growth that is there in India.
So are you adding names here? Have you been adding in the last couple of weeks and months? Are you raising pharma as a percentage in your overall portfolio?
No, not really. We actually went into this crisis almost at 15, at about 14%. So that has now naturally gone up to 15%. So we would, kind of wait before buying. See, we also run very concentrated and very small number of stock portfolios. So we don't have the luxury to go and buy 1% in a company or 2% in our portfolio. Whatever stocks we buy, and on an average, it's a 5 to 6% weight in our portfolio, and we own only 20 stocks.
Right. Susmit, what are your thoughts on Indian energy stocks, be it oil marketing or our own upstream company? And though they are completely de-linked with what's happening in NYMEX, but gas companies, how are you playing energy, which is 8% of your portfolio?
So here we are basically playing the clean energy theme. We think one of the fallouts of COVID may be people's want of the continued clear blue skies and pollution-free atmosphere that we are experiencing now. And we think that fuel, clean fuel will be a big trendsetter in the next few years in the world. And there are not too many countries which actually are so underpenetrated on clean fuel like India is. We have primarily been, a crude-led, a liquid crude-led market, and only very recently have we moved towards gas. So here again, we think, that the story is just starting to unfold in India.
Right. All right, Susmit, wonderful chatting with you. We'll connect with you offline and discuss more. Wonderful to have you. Thanks so much for your time. Look forward to having more of you on my show going forward.